Have you ever bought a gym outfit after seeing a celebrity or influencer wearing the brand? I know I have. But what about an investment product, a cryptocurrency, or a trading scheme? In this video, I'm covering a crazy news story about how the UK's financial regulator has charged 9 celebrities and influencers, including stars of Love Island and The Only Way is Essex, for promoting an unauthorised trading scheme. Let's get into it. Investment analyst with 15 years investment industry experience, and on this channel, we talk about tips and strategies to help you become a more effective investor. So last week, a news story broke about a wild celebrity-promoted investment scheme that risked losing investors significant amounts of money. According to the BBC and several other sources, social media influencers with a combined Instagram following of 4.5 million people have been charged in relation to the promotion of unauthorised investments in the UK. The UK's financial markets regulator, the Financial Conduct Authority, or FCA, has charged them over allegations they were paid to promote this unauthorised investment scheme. This is interesting because the FCA has previously warned it would crack down on so-called influencers if it considered posts were misleading. What makes this so significant, aside from the celebrity angle, is it's the first prosecution brought by the FCA against influencers regarding alleged financial promotion breaches. According to the BBC article, the FCA has alleged that Emmanuel Nwanze, age 30, and Holly Thompson, 33, ran an Instagram account under the handle @Holly_FX_Trends. You won't be surprised to hear that this account has now been deleted. What? They've been accused by the watchdog of giving advice on buying and selling investments called contracts for difference, but without the required authorization from the regulator to do that. So what are contracts for difference, you might ask? According to Investopedia, a contract for difference, or CFD, is a financial contract that pays the difference in the settlement price between the open and closing trades. CFDs are essentially used by sophisticated investors to make bets on whether the price of an underlying asset or security will rise or it will fall. They're normally only used by professional traders, and they're actually banned in the US according to Investopedia. In its notice, the FCA said that CFDs are highly risky and that 80% of customers lost money when investing in CFDs. That's a lot. Mr. Nwanze allegedly ran the foreign exchange trading scheme and issued unauthorized financial promotions, the FCA said. The watchdog claims that he paid social media influencers to promote @Holly_FX_Trends to their Instagram followers. And this is where the juicy celebrity gossip comes in. Those accused by the FCA include Lauren Goodgo, who rose to fame on reality show The Only Way is Essex, and Biggs Chris, who appeared on Love Island. Love Island's Jamie Clayton, Rebecca Gormley, and Eva Zappico, TOWIE's Yasmin Okello, and Geordie Shore's Scott Timlin were also among those charged. Mr. Nwanze, Ms. Thompson, and the influencers they paid have been charged with unauthorized communications of financial promotions. Mr. Nwanze also faces 1 count of breaching a so-called general prohibition under the Financial Services and Markets Act of 2000, which prohibits people from carrying out regulated activities in the UK unless they are allowed to do so. If convicted, they could face up to 2 years in jail, and they're due to appear in Westminster Magistrates Court on 13th of June of this year. I think there are several things that we can learn from this case already. The first red flag is the promotion of any investment product. There are so many different investment products out there that you can choose from. It's almost impossible for anyone but a professional investor to identify a suitable product for you. Ideally, you want to talk to a registered financial advisor before investing in any investment product, although I'm aware that that isn't always possible. For people using investment platforms like Hargreaves Lansdown or Moneybox, you'll notice they have online questionnaires which assess your needs in the absence of a financial advisor doing this job. In the industry, this is called a suitability test. Whether it's a person or a platform, the industry should be doing the best it can to help you find a suitable product for you. The second red flag is that the products or trading scheme they're promoting is unregistered. If an investment product is going to be marketed to everyday investors and consumers, then these products need to be registered with the appropriate regulator in your country before being made available for sale. In the UK, this would be the FCA. In the US, this would be the Securities and Exchange Commission, or SEC. And this scheme wasn't registered for sale in the UK by the FCA. So that's just a big no-no. The third red flag for me is the product itself. Contracts for difference, or CFDs, are notorious in the industry as being highly risky. I actually don't think I know any investment professionals who talk about trading these kinds of products for their own personal portfolios. And I fear the people who promote these types of products are really just preying on the naivety of novice or beginner investors. Kind of immoral in my view. And lastly, the fourth red flag has to be the people involved. Who is promoting the product should be considered almost as much as what products is being promoted. Looking at the Instagram pages of the organizers of the scheme, as well as the celebrities promoting the scheme, there is no evidence that they are qualified or registered investment industry professionals. Genuine investment schemes and products are provided by regulated firms, and authorized recommendations are made by regulated and registered financial advisors. In the UK, you can check approved financial professionals on the Financial Services Register. This is a public record of firms, individuals, and other bodies that are or have been authorized by the FCA or the PRA, the Prudential Regulation Authority, another regulator. So what does all this mean for everyday investors' portfolios? The investment industry, in my view, having worked in it for 15 years, is an extremely well-regulated industry. Given there are so many firms and products out there, there are actually relatively few blow-ups, and that's a good thing. But with the rise of social media like Instagram and TikTok, it's easier than ever for people to say anything and promote anything. The barriers to entry are so low. And as we've seen with wild market movements around cryptocurrencies and so-called meme stocks like GameStop, normal people can get sucked into bad investments very quickly. So in short, I do see this first FCA charge as indicative that investing is becoming potentially riskier for the average person. Not only do you have to think about the risks of investing in traditional assets like stocks and bonds, but people also have to contend with unauthorized investment products being promoted to them via social media. Yes, there have always been dodgy investment scams out there, but what's new is the speed and scale at which these investment schemes can be promoted and potentially do harm to people. So as ever, it's best to do your own proper research, check any investment products you're interested in are regulated and registered, and if you can, talk to a financial advisor who can give you proper advice. Last thing I'll say is you'll never see me promoting any investment products or crazy trading schemes like this, and you will never see me making recommendations about what you should do with your money. I just don't know your personal circumstances, what your goals are. My goal here is simply to share my knowledge and help you understand the investment industry and investment products better. Promoting products is problematic and challenging, even for investment industry firms and professionals. That's why authorized financial promotions include risk wording and disclaimers. The small print is there for a reason. It's not there to annoy you, although it might be annoying sometimes. Okay, I hope you found my quick take on this story interesting. If you want another great example of how everyday investors can get hurt by wild market swings and hype investments, then why don't you check out my review of Dumb Money. It's an awesome film and a great cautionary tale about investing in volatile stocks. Until next time, keep investing selectively and effectively.